What's up, everybody? Welcome back to HPT. Today, we're going to be breaking down the most simple, easiest day trading strategy, and I want to show you how it worked today trading FOMC, right? So FOMC is a day where Jerome Powell gets on the mic and he starts talking, right? And the market responds with massive volatility, right? And this is what we've been seeing lately. We've been seeing crazy volume for the last 2, 3, 4 weeks, right? And it's very important. One of the main issues that I used to run into when I was a beginner trader was not sticking to a simple approach, right? Your consistency, your output will match your input every single time. It's a scientific fact. If you plant an apple seed, you get an apple tree, right? If you plant a cucumber seed, you get a cucumber seed plant, right? So your input will always match your output each and every single time, right? It's a principle that most traders neglect, and it's exactly why they struggle in the market, right? So I want to break down what day is this? This is 3/19/2025. Let me share my screen here so everybody could see, and we'll dive it. All right, look at this beautiful chart, man. I just love looking at these charts. I know if you guys are just as obsessed with me, that you guys will love this. Actually, as a matter of fact, I want to read you guys something before we go any further here. This was very deep that my buddy sent to me. It says, I have a theory. If you put in 80%, you get 80% back. But if you put in 100%, you get 1,000% back. The last 20% is where the magic happens, because almost nobody is mad enough to go all in. Only a perfect storm of delusion, obsession, and a pinch of childhood trauma makes that extra 20% possible. It's the part where you keep going long after logic says retreat, where your biggest weakness becomes your biggest strength, an inability to stop. Because at a certain point, success isn't about talent or luck. It's about who's willing to suffer the longest. Pain is the filter. Few pass it, right? When I read that, right, my buddy Darren from Bowman Board of Trade sent that to me today. And when I read that, guys, it really helped. The first thing that came to my mind was trading in my journey. And I'm sure most traders can really relate to this, because trading, to become good at this, you 100% need to be 100% all in, but you need to be borderline delusional, right? You know how many times I've blown an account, a cash account too, not no funded account, like blown cash accounts, right? Losing thousands of dollars, and really came to that realization where logic was settling in, telling Josh, you can't do this no more, right? You got a child, you got a wife, right? Like, you have responsibilities. You can't keep blowing money. But I still decided, listen, I cannot give up, right? That extra 20% that the 90% don't put in, right? It gives you back a yield like no other, right? So that extra 20% is what I want to talk about today, right? And these are the principles that I've learned in my last 6.5 years of trading. And this is our 3-step approach that has been tailored in a way that is going to keep you from making bad decisions, right? Let's talk about it, right? So once the market opened up, let me pull up SPY here. What do I mean when I say that this strategy keeps you from making bad decisions, right? Well, let's talk about it. It's a very simple strategy, right? So to break it down, it's A, identify open print, right? This is the 930 bell price. So you're going to see here at 930, hold on. Every day at 930, we get tons of volume. This is called open print. Let me show you the volume that comes in, because it's extremely important that you understand this. So if I go here to equities and put volume subgraph, okay. So look at the volume here at the 930 candle. It's extremely high, especially in regards to all the other candles, right? Here's the 930 candle. Look at the rest of the candles. Much lower volume. So this is what we call a level of interest, or a critical level, or a pint number, right? Whatever you want to call it. Open print is the first step in our criteria. You must identify it, right? Because until you identify it, you're probably trading the wrong area on the chart. right? So before we go any further, guys, and if anybody's watching this and they want more information on this strategy, click the link below. It's going to bring you to my website. And when you come to my website, you're going to click HPT crossover. Or if you click the first link below in my bio, it's going to bring you to my website where I flesh out in deep detail this easy, simple 3-step approach, right? Number 1, identify open print. 930 bell price, look at the volume. Number 2, identify the moving average crossover. This is extremely important, and I'm about to show you why, right? So let's go back to today's trade. Oh, once again, so go to the bottom of this page, and if you want free data reports, I send these out weekly, okay? I used to send them out monthly. Now I send these out weekly. I send you high-level summaries, right? If you come here and you click here, this is what I'm going to send you weekly. It's high-level summaries, data reports. There's no other traders out there doing this, but this is what I do. I study data and I build profitable systems based off the data, right? This is what I've been doing for an extremely long time. Even before I was a trader, I studied data, right? Data is key. So if you want these high-level summaries on my strategy, click down here, subscribe to data reports, and then click I want to receive the free mini course, and I will send it to you completely free. Guys, people used to pay me for this information. So click these below. I will send you these on a weekly basis for free, right? So without any further ado, click that, get involved with HPT. So how did this strategy keep me from getting smoked, right? Well, just like it is. We found, back to what I was talking about before. Your output, where you are currently, is a direct result of your systems and habits. I'm going to say that one more time. Where you're at right now, whether it's trading, your results, whether it's your fitness, right? What sort of shape you're in, life in general, wherever you are, is a direct result of your habits, right? And behavior. Your decisions, which are based off your belief system, dictate where you are in life, right? That's your input. Where you currently are is your output, and your input is your habits, right? Your approach, whether it's with trading, whether it's the way you drive, right? If you get into an accident, right, it was because you were behind the seat of a car. If you're fat and out of shape and obese, it's because you have bad eating habits. If you're inconsistently profitable, it's because you don't follow and execute your approach appropriately. So what happens when open print's established? We get a green bar that's ignored, right? This looks like a good short play, but there's no moving average cross. So once again, without the 3 components, my edge is not present. Therefore, I do not make a trade, right? And then price rallies off and rips, and where we stay patient until we take our first long of the day, which was right here. We entered the market long and caught a nice move, about 30, maybe 30% to the upside, right? Very simple. If I whip out the Discord, I'll show you guys, because you guys know I'm all about transparency. This is the second trade we're going to be going over, right? This was the beautiful long play that we took off previous day high. Once again, what are we getting here? Moving average cross, red bar ignored. This is our edge. We have to take it, right? So this was the second trade, our third trade that we took today. Bringing in over 38% ROI, just caught a really nice move up here into 567, right? So that was our second trade. But our first trade, once again, we'll go to SPY Alerts because I really want to show you guys what it is we do over here. So at 10:01 a.m., I'm entering the market long. Right here, this is the 10 o'clock candle, right? You guys could see 10 o'clock. So we're getting in the market long when the market looks like this. Now, it's very important to do this. Why? What am I doing? Well, I'm breaking down my exact entry point. So to become a really good trader, you have to have a great way to analyze yourself. if you're not doing well, or if you're struggling, or if you're having a bunch of inconsistent months, I'm not talking about if you had a bad day. We all have bad days. I'm talking about if month over month you're not seeing consistent results, this is what you need to do. You need to screenshot your entries, right? This is an entry. This is what the market looked like when I had my phone in hand and was buying SPX calls, right? It's very important to understand, because it's easy to journal your trade and go, oh yeah, I caught a long here, it looked great. But tomorrow, this is all the information you're going to have. So you need a way where you can be self-critical, but prepare yourself for tomorrow, right? It's extremely important that you do this. This way, you're able to see your strategy tomorrow and execute flawlessly, right? You need to reprogram your mind so that execution becomes easy, right? On a subconscious level. So this was the first trade that we took right here once again. And the biggest thing was this. Notice how price rallies below the 50. There were a lot of sellers here that got stomped out of their positions. You know how I know? Watch the volume. Very large red candle. Oh, wait, you guys, there you go. Very large red candle. Then look at the next candle. Bam. Look at the volume there. That's what we call institutional buying, right? So if and when you see this amount of volume coming into the market, matching the volume of open print, this is something that you have to be observant to. You have to understand this. And the biggest thing here that really pointed out to me was the fact that this bear trap right here was completely disrespected, right? These sellers came into the market. Sellers got the ball. They're going up for the jump shot. And out of nowhere, bam! Buyers go, nope, not happening. I'm out. This is my ball. Think about, see, when I'm watching price action, that's literally what's playing in my mind, right? It's literally a battle. It's buyers versus sellers. It's good versus evil, right? It's green versus red. Whatever it is that helps you paint that picture appropriately, this is going to keep you in the now moment so that you can execute accordingly, right? So that was our first trade. Caught a great long there. And then I'm patient and I'm telling everyone, I'm like, yeah, I might not really trade today for the rest of the day. It's FOMC, right? But then again, if my edge presents itself, I'm gonna go for it. So then I take a long here off previous day high. Let's talk about this trade. This was a loss, all right? Took 3 trades today. 1 was a loss. So my first trade, bam, right here. This was beautiful, right? Let me highlight it just so it's easy to reference. First trade, bam. Second trade, I hop in the market long right here off previous day high. What am I doing here? Well, the first thing I'm doing is I'm playing with the 1 hour trend, right? So if I whip out the 1 hour, right, and I'll be able to show you a little bit better, I'm playing the 1 hour trend as if, hold on, it's a 5-minute time frame, right? So look at the market right here. The moving averages are high and tight, right? They look good. Price is hugging the moving averages. There's really no extensions. So when I see something like that, I want to trade in the direction of the trend, right? This is what I call healthy, right? Healthy is a pretty word for ordinary or no extension. There's no extension between price and the moving average. Or if it is, it's a healthy, right? It's a healthy trend. I want to trade in the direction of the healthy trend. So I take the market long. I get stopped out on the next candle. Why? What happened? Well, number one, sometimes you're going to have a loss, right? So don't beat yourself up about it. Don't kill yourself over it. You're going to have a loss. And if it hurts more than you want it to, that's just a clear indicator that you're trading with way too much size, right? I tell this to all the traders I coach. Master 2 contracts before jumping up, right? Don't like the trader that thinks just because I'm going to trade with a bunch of money means I'm going to make a bunch of money. No, you're just going to lose a bunch of money because your emotions are on the line, right? Master your risk reward. Let that be your major strength, right? But basically, where I went wrong here is I didn't allow price to create a red bar to be ignored, right? So there was no RBI here. I just seen a large green candle off a critical level, and I forced myself into the trade, right? This is what I call breaking character. Why? Because I didn't stick to my approach. Yes, it was logical. It was valid, right? Made sense. We're getting tons of buyers off previous day high. But then again, just like we were talking about, your output reflects your input. So if I'm trading my 3-step approach religiously over and over, and I decide to jump ship and do something else, okay. But when I find myself in a losing trade, who's to blame? This guy, right? Because I was trying to get Q. So that was my second trade, and it turned out to be a loss. So then at that point, I'm like, okay, you know what? We got FOMC coming up. I had, I'm 1-for-0, right? I had 1 win, 1 loss. And I don't like to make major decisions as far as I'm done for the day, right? Instead, I like to go, okay, you know what? If my edge presents itself again, I'll get in, right? And that's exactly what happened, right? Look at this, guys. So let me reference the Discord here, just so we can have full transparency. So right here at 2:31 p.m., I go, this is a beautiful long entry, right? So I'm watching this, and notice what's happening here, right? So if I whip out the Think or Swim, you'll see I got the 5-minute time frame up. What's happening here off open print? Open print's being defended beautifully. Look at this. Price rallies into it. Phasing candle. Price rallies, excuse me. Price rallies back into it. Massive buying. Now, in the Discord, I go, if we can break and hold above previous day high, I'll be looking for longs, right? So one of my tools that I use to determine strength or acceptance is an RBI or a GBI and a healthy trend, right? So those are my main tools. Healthy trend, meaning no extensions. I want nice price action, nice structure. And then when I get the RBI, I'll enter into the market. So right here at 2:30 candle, just like I said here in the Discord, what is this? This is at 2:31. Beautiful long entry. I enter the market long at 565.40. Right? So my first target is going to be 567. Right? So this is about a $2 move. I'm looking to capture very quick. Right? So once again, let's just go back here and I'll show you exactly. SPY alerts. Bam. There's the entry. And we get a really nice move all the way up to our target where we book profits, right? It was literally a 2-3 minute trade. Now, the moral of this video, guys, and what I want you to really take from this, because I never want you guys to watch one of my videos and take nothing from it, right? The moral of this video is your current output in results is a direct reflection of your input and your ability to follow it. I tell every trader that joins my team, you are only as good as your ability to execute your strategy, right? So, and I'm not even telling you have to trade my strategy, but it would be smart to subscribe to those data reports, because if and when you get those, you'll realize this strategy is very simple, right? It's very repeatable, and it breeds really good results because it's simple, it's easy, and it's effective, right? So if you got to let go of wanting to gamble and start to look for the RBI, GBI process off open print, right? Start to watch those moving averages, those trends. Get affiliated with what healthy trends look like, what acceptance looks like, right? And really learn to trust your edge and watch everything else really start to work for you, right? So all in all, FOMC was a great win. We'll wrap up here. Let me just show you one more thing. Daily recap. Very simple. What else about this trade could we take into tomorrow? Because that's a main thing that's helped me out tremendously in my trading career, is figuring out what's repeatable. What's repeatable about this trade? Meaning, what about this trade could we do tomorrow to ensure our process is effective? Well, you guys already know, for me, number one's critical level, right? We got previous day open print. We got previous day high. Number two's moving average cross, right? We're getting the cloud is turning from red to green, right? The sellers are going up for the three. Buyers go, boom, no, that's mine. My ball, right? That's what's happening. That, like, I want you guys to think that. Think that in your brain next time you see that cloud change colors, right? And then the RBI, right? The red bar right here getting smoked. That right there is literally painting a picture going, oh, buyers are stronger. Buyers have the ball. Buyers are dominant. Right? And it's a very simple concept, because if they weren't, they wouldn't be allowed to break the top of the candle. Right? If buyers were not strong, meaning they were weak, that would only mean that they wouldn't be able to out-demand the supply of the selling candle. Do you guys understand that? So this candle is selling off, meaning there's a larger amount of supply than there is demand. So if the candle after it blows the top off, that is literally a visual painting a picture saying the demand is higher than the supply. I need to get in this long. That's exactly what we did. We took that long, and it just rallied up. And then you see the RBI, right? You see the RBI? Red bar, ignored. Red bar, ignored. Red bar comes down, tags it. Look, it tags it. So the sellers that got in right here, they're getting stomped out right here. They order a bunch of sell orders. Maybe it was off 5, 6, 7. Buyers just completely dominate them. So now these sellers are in losing positions. How many times have you been in a losing position going, God, if you just let me break even, I'll take it. God, if you let me break even on this trade, I'll take it. Well, this is what we're betting on every day, because these sellers are now down 20%. Then price comes right back down to where they got in. They're back at zero. Thank you, God, I'm out. Now, when those sellers get out of their positions, guess what that does? They buy out of their short sale, right? So when you sell a commodity, you're actually selling the share at a higher price and buying it back at a lower premium. So when short sellers are getting out of their positions, they're actually buying. And when buyers are getting out of their positions, they're actually selling. So use this understanding, this knowledge, to help you paint the picture that's going to give you the context you need to execute appropriately. One more thing here before we hop off. Great trade. What else about this is repeatable? Notice here we break below the 50, right? That's bearish. Let me show you like this so it really hits home for you guys. Look at this chart. Price sells off, comes up, tags the 50. Okay. What happens at the 50? sellers defend it, okay? Sellers are showing strength at the 50 EMA. Sellers have the ball. Price sells off the open print. Boom, this happens. What does this mean? That means that this was a false break below the 50. You can't make this shit up. You see these sellers right here? What do you think happened when price came back to that zone? They bought themselves out of the positions, right? They bought the shares to exit their short sale. What happens when people are buying shares? The demand increases. What happens when the demand increases? Prices go into the moon, right? So one more thing we could take from this that's repeatable is the break and retest below and above the 50 EMA, right? The 50 EMA is my guideline. It's not in my 3-step approach, but you can bet it is on my chart every single day for this exact reason. When price falls below the 50 and can't hold, you get a rally. Just like, hey, what else? When else did that happen? Right here. Look at here in the morning. What happened? Break, retest off open print, green bar, ignored, missing the moving average cross. Therefore, no trade. Price falls, closes below the 50. How many traders out there said, oh shit, this just closed below the 50, I'm getting in? What do you think happened to them right here? Boom! Peace! They get smoked. And what happens when they get smoked? They need to buy themselves out of the position. So the demand increases. When demand increases, you get rally, right? Which was another reason why we entered long and captured that 30% move right there. So all in all, guys, it was a great day. I took 3 trades, 1 L. Trade number 1, trade number 2, right here off previous day high. Once again, not going to kill myself over it. Neither should you, but we should learn from it. And what I learned from this is I took a trade without following my approach. Took an L. Input, output. Fat and out of shape. How'd you get that way? Neglecting exercise. Inconsistent results. How do you get that way? Neglecting a process. Neglecting repeatability. Right? You are only as good as your ability to follow your approach. Did I follow my approach right here? No. Did I follow my approach right here? Yeah. And I killed it. Smacked it. So I love you guys. Thank you for coming. Once again, if you're not involved, get involved. Click that link below, dude. If you are not getting the weekly high-level summaries, that's on you. But guys, I'm literally sending out weekly high-level summaries on this strategy and a free mini course on it. Literally, all you have to do is click that first link, go to the bottom of the page, put your name, your email, and I send these to you directly, right? Because I truly believe my goal, and I'll be honest with you, my goal is to build the strongest, most effective day trading platform out there that doesn't cost $200 a month, right? I want it cheap, I want it affordable, and I want all my members to be killers. I want everyone on my team to be a monster on the market. So that's my goal. How do I do that? By giving you the data. If I can give you guys the data and then teach you the system, input, output, okay? Consistent input means consistent output, okay? All you need to do is click these, get affiliated, focus on the process, and you too will yield an 82% win ratio. Unless you break character and take a trade that doesn't follow your approach, right? So guys, I love you. Stay blessed until the next time, right? Let's finish this week off strong. And if anybody wants to trade live with us, right? If anyone wants to trade live with us on Friday, go to my website, send me an email or drop it in a comment. I will get you access so we can show you how we give it up over here at HPT. I love you guys. Focus on your strategy. Focus on, oh, one more thing. If anyone wants to join the team, there is a link in the bio. Promo code is execute. You get 20% off. Okay? 20% off Trader Bootcamp. Promo code execute. I love you. See you in the next lesson.